What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on NIO stock.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up on.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then we'll continue with the fundamental news that might drive the price of this company. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this point and I've told you that we hit the range of roughly $16, and let me zoom out a little bit. It is a Fibonacci retracement range. Let me switch to daily time frame. It is a Fibonacci retracement range if I pull the Fibonacci tool from the very bottom to the very top, because we complete all 5-way structure, and this means it is only one wave on a greater scale. And it is a 0.786 Fibonacci range, and we hit it at that moment. Let's continue with the hourly time frame. And right here I've told you that you should stay aside from any trades if you want to open a swing trade long position, and I've told you that this movement to the downside is a pure catching a falling knife. And it happened, we went even lower, and from this range, let me show you more thoroughly, we had very good bounce to the upside with extremely high volume. And I have to say that this movement is quite bullish, and from my recent video this asset lost about 20%, but on the most recent session it gained about 16%. So huge volatility. That's why you have to be cautious, but for now, from the technical standpoint, I see more positive signs. So let's continue with the fundamental news and let me show you what is the sentiment for the markets right now. As you can see, S&P 500 during last session lost about 0.13%, Dow Jones lost about 0.14%, and Nasdaq gained about 0.04%. Russell 2000 also lost about 0.12%. So we are pretty much moving sideways, but let me show you this. Investors this week have been gearing up to receive the Federal Reserve's latest monetary policy decision Wednesday afternoon, which is likely to show the first of multiple interest rate hikes this year. Currently, the benchmark interest rate has been kept near zero since mid-2020, with the central bank using low rates and a series of other monetary policy tools to keep financial conditions running smoothly amid the pandemic. The Fed last raised interest rates in 2018. And importantly, in addition to delivering a decision on rising rates, the Fed will also release an updated summary of economic projections, or dot plot, showing central bank officials' thinking on where interest rates and growth in the economy may be headed this year. And to that end, many pundits expect to see the Fed upgrade its outlooks on inflation and the labor market this year. So today is the day when we will see the announcement from Federal Reserve, and definitely it will be a catalyst. But what type of catalyst we will see in just several hours, and if the interest rate hikes will be more than 25 basis points, definitely it will drastically impact the price of all of the stocks in a negative manner. But otherwise, if it will be just 25 basis points, we already priced in this action into the value of the stocks. So, and let's continue with the news related directly to NIO. Right here on cnvpost.com we have this article that was published on March 15th, and it's titled "DEUTSCHE Bank on fire sale of China EV stocks. Near-term technical trough could occur, but multiples may remain paralyzed for a while." And let me quote you this. At a time when Chinese EV stocks are experiencing panic sell-offs in both the US and Hong Kong, we need a smarter mind to help explain what's really going on, and Deutsche Bank analyst Edison Yu's team is one of them. These big declines represent delisting fear and aggressive selling by prominent large holders, and a near-term technical trough could occur in the coming weeks, but multiples will remain paralyzed compared to their US peers for some time, the team said in a research note sent to investors on Monday. In the note sent to investors before the US stock market opened Monday, Yu's team said the sharp declines of these companies in Hong Kong remind them about a classic scene in Margin Call, where Jeremy Irons expresses the following: "We are three ways to make a living. Be first, be smarter, or cheat. Last week some entities choose to be first, and this may have turned into a fire sale where institutional shareholders simply have given up on China ADRs as an asset class, the team said. In addition, recent reports of Russia asking China for military assistance and the strict COVID lockdown in Shenzhen have also exacerbated already poor investor sentiment, according to the team. And let me show you that for now. Let me switch to CNBC.com website. For now, we have a huge increase in cases in China, and let me quote you this article. Chinese COVID spike worsens. Dongguan factory center locks down. The new cases top 3,500 nationwide. Recent outbreaks in 28 provinces have infected more than 15,000 people and stem primarily from the highly transmittable Omicron variant. Chinese National Health Commission said Tuesday, according to state media. On Tuesday, Dongguan City in the southern province of Guangdong ordered employees of business to work from home and lock down residential areas, permitting only necessary activities such as buying groceries and taking virus tests. Yum China, which operates Pizza Hut and KFC in the country, announced Monday that same-store sales for the first 2 weeks of March have fallen by about 20% year-on-year. And definitely we are not out of the pandemic, and definitely we should be aware of this situation as well, because the supply chain issues are still in play and are affecting all of the markets and are affecting all of the companies. And that's why we have the negative, pretty much negative sentiment for the market right now. And let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, as you can see, we have very good volume to the upside, and let me switch to daily time frame and let me show you that this volume, let me show you more thoroughly, is the highest volume for the entire year. And previously we had the same volume exactly a year ago. And this means this asset, as you can see, it has increasing volume during this movement to the downside, and with this candle we have the highest volume. This means, as I already mentioned in my previous video, we might see the trend reversal, at least a medium-term trend reversal that might lead to some higher targets. And what should we expect next? In my opinion, for those of you who want to invest in this asset and who already done your own due diligence, you can accumulate your position on these levels, because every daily red candle gives you more chances to dollar cost average your price of this asset, and this will give you much more profits in the future. But if you want to swing trade this asset, I have to say that for now we have decent chances to see the trend continuation. And if you want to enter the position right here, your stop loss should be at the slightly below this bottom, and it is quite big stop loss for more than 14%. That's why if you want to catch the trade with this asset, just dollar cost average your position and put your stop loss slightly below this previous bottom, and the upside potential for this asset is quite massive. We should break all the previous swing highs, and let me show you that from our current range we might have up to 36% to this previous swing high, up to 55% to this one at $23.3, and up to 72% to this range of roughly $26. Definitely it is a very good potential profits, but you have to keep in mind that we have only one sign that this might be the bottom, and it is the volume. And for more confirmation, if you are a conservative trader, you should wait until you will see the trend continuation, and we have to have higher lows and higher highs. Only in this retracement you will be able to re-enter your position with more confirmation, but with the less upside potential. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack. Baby, I'm